Good morning everybody, Special for Serene Education with the 4 majors notice update for the 22nd of August 2012. Hi guys, let's have a look and see what's been happening on Euro. Let's have a look. Yesterday, fantastic day, upside positiveness, breakthrough. I did see we had two spinning tops, two indecision candles at the underside of a resistance level. We needed to see a bullish candle, and sure enough we got it. So where to from now? So ultimately back up towards that 12,700 would be our next potential target, because that's our previous major support and resistance level on this time frame. You can quite clearly see that we had hesitation here not so long ago through mid-June. So as it stands now, as long as we maintain above 12,3500, then ultimately we should be looking for a kick on towards the 12,700. All our intermediate trend line is up. You can see swing high, swing high, swing high, major trend line. If you look at the larger scheme of things, the short-term one, yeah, cancelled, but the ultimate long-term one, you can quite clearly see, is way above us, and that should dissect roughly around the 12,700 mark as I plotted on the chart for you. There we go. You can clearly see swing low, swing low, swing low, swing low, and thereabouts. You can see quite clearly that 12,700, a nice support and resistance level in the past. Through most of July 2012, we've had a attempt here in early January, and then through bits of May, latter of June, and start of July. So 12,700 is going to be our next potential target as we head higher. Nice bullish engulfing candle, breaking a major support and resistance level here at 12,3500. Everything should start swinging higher intraday. If you start looking at your hour, your 4 hour for example, you can see the buying sentiment here to the upside. Fantastic. RSI above the 50% line, and most importantly, one, our moving averages below price. That includes our hourly entry chart. See RSI above 50, moving averages above. Everything's looking fantastic. The CTC is in our favor, blue across the board. We do have a red arrow, however. That confirms as we head into this 1250 mark, because the 1250 is a pullback area, a fib consolidation area for this pair. So if I take my fib tools and take the high of May to the low in June, back up to these areas here in mid-June, you can see clearly that the 23.6 on my daily, we have a fib projection level here at the 1250-200 mark. So as we head into this area here, we're going to see likely target or profit being taken as we head into this consolidative area. On towards sterling, let's have a look at the daily. Here again, break of a major support and resistance level, this 15,7500, yeah, massive resistance level here, a lot of consolidation in and around this area. And as we can see, yesterday buying into a major pullback. So the high in May to the low here in early June, you can see the retracements. For here 23.638, the 50, you can quite clearly see that 50 we've had hesitation here, and sure enough yesterday's candle buying into that resistance level and pulling back at the end of the close. So 15,800, we've got to see a break and close higher than that to see any further upside movement for this pair. Otherwise we could see consolidation back towards the 1575 before we see a kick upwards. Notice the CTC is very much in our favor now. We've got blue across the board, and the most important thing now, we've had a break. So great. So now it needs, if we can trade above 15,800, then we should be targeting the 15,900 and back it towards that 1600 near term. So all looking good at the moment now. So intraday, just want to see a break above 15,800. There we go, 15,800. We need to see a nice break above 15,800. I'll just mark it in my 4 hour chart there with a nice little black line. So I'm well aware. You can see that shooting star or hesitation candle, and you can see quite clearly over the last 12 hours or so, hesitation at the underside of 15,800. We do need to see that being breached with a nice hourly close above it, and then we should be targeting that 15,900 above us. On to the US dollar Swiss franc. Let's have a look at the daily. Here again, as per the euro and sterling, we had this particular pair trading into a support instead of a resistance level. We had two indecision candles at this resistance, a lot of negativity in those two candle setups, still telling us that we should be looking for shorting opportunities. However, we needed to see a break of that major support here at 970. We got that yesterday. Bearish engulfing candle below this major support and resistance level that we've seen through 2 months in particular. Now trading into that 960, which happens to be that 23.6 fib extension level. So get a nice, you can trade into 960, get a nice break below that, then we should be looking at price moving towards that 945, 940 mark as the institution catches up here. Notice this CTC long term is still looking positive. However, the longer this momentum maintains to the downside, we're going to start seeing all four parts of our strategy moving into place. So we had the red arrow, red candle, and eventually Break on 960 should see the color on either side of the histogram going red eventually. So as things stand now, look for a nice trade into 960. Could see consolidation there, but ideally a nice break of 960 would see the continuation of this bearish outlook towards that 945, 940 mark down here towards the institution moving average, a prior support and resistance level in the past. Last pair of the day is US dollar Japanese yen. Let's have a look at the daily. Here again, nice break above a major support resistance level here, the 79.20, which happens to be the institution moving average. You can see quite clearly now that we see all the moving average below price. A nice little breakout, consolidation, and doji here, a pullback, almost like an evening star at the top end of this little run here, after a major support and resistance level here at 78 was found. And now we can clearly see that price is maintaining this momentum towards that 80 mark, which happens to be the prior support and resistance level on a larger time frame. You can see a lot of consolidation through here through May, June, July of this year. So as it stands now, as long as the institution moving average of 79.20 stays in play and we see price finding support here at 79.20, then ultimately we should look for price to head on for the long term, or for the foreseeable future, back up towards that 80 mark. Our CTC is very much in our favor. Blue arrow, blue candle, and the CTC on the other side is blue. So as long as 79.20 stays support intraday, then we should be looking to see if that 80% or 80 mark being tested quite soon. So as it stands now, look at your intraday charts. Notice here on the 4 hour, the last 12 hours, a lot of selling into it, then a hammer, further hammer, bullish engulfing here. Look to see if you can buy a nice little bullish engulfing on a 4 hour. Would see price reverting to the upside, and we could see a reattempt of the 79.55, 79.60 mark before we head off towards that 80 mark above us. All the moving averages, bar the 20 period moving average, are below price. We have two parts of our selling here, but we're selling into a major support and resistance level, i.e. a consolidation area here at 79.20. If this is to be a genuine sell, we want to see a bearish close below that. You can see the past 8 hours in particular, price traded below it, but it failed to close. So it's telling us we could see potential for support being made here. So ideally look for a nice bullish engulfing candle on hourly to see buying sentiment coming into this, and then we should be looking at 79.60 as our first target to the upside. Hourly chart, my entry chart, you can see here a lot of indecision candles, a lot of dojis. I don't trade any indecision. I want to see a decision candle. I know 79.20 is a support area intraday, and my institution's still below price, so everything's still looking positive. For upside, this is just a pullback from this bounce, this positive buying sentiment. You can quite clearly see here from the lows here on the 12th of August. So as it stands now, you can see the 23.6 mark has been breached, and we're trading at the underside of it. If we fail to see a noticeable support here at 79.20, then we could see 38.2% fib retracement here at 79.10 being our next potential target. So draw the 79.20 and nice and thick. The price has to maintain above that level. Break and close higher than 23.6 today at 79.30 would be an entry signal for the upside, and we should be targeting those levels here at 79.65 for the foreseeable future intraday. That's it, guys. Hope you have a fantastic trading day. Please keep it simple. It's imperative that we keep our trading simple. Have a look and see if there's any news out today. I'm just looking at the analysis this morning. Last night we had the Japanese trade balance figures that came out positive for the Japanese market, and you can see the US dollar consolidating. Not much trading range through that news announcement. Yes, a slight move to the downside, but that didn't phase at all. And you can see a lot of consolidation just above this major support retracement area here at 79.20. Other news today, nothing for the European market, but we do have for the US existing home sales figures at 3 p.m. GMT this afternoon. Then we follow that with crude oil inventories, very important. But the most important one for the Wednesday is going to be the FOMC meeting minutes. That's going to be really important. So make a note of that, guys. You could see a bit of action this afternoon on the US session. Other than that, keep everything simple as I mentioned. Back your trading up with some sound money management rules. You will not go wrong. You will find that you'll have more winners than losers. Okay, it's imperative that you are well aware of major support and resistance levels on your daily and weekly. See what price is doing in relation to that on your intraday charts. Plot those lines, trend lines, etc. They'll gauge. It'll give you an idea of where price is likely to go to on sentiment. Look at candlesticks. They all will help. They will all build you a nice, pretty picture of where price sentiment is lying, and if you understand where all that lies, then you'll be more likely to make a better judgment on where price is likely to go to, and therefore be more profitable. Other than that, have a fantastic trading day, and I'll see you first thing tomorrow morning. Until then, Trade serenely.